Imagine a ship sailing smoothly on calm waters, only to suddenly find itself surrounded by a sea of icebergs. That ship is Canada, and the icebergs are the numerous economic challenges threatening to sink it. But what's behind this sudden shift in Canada's economic tide? And could these warning signs be the harbingers of an economic meltdown that's just around the corner? Let's dive into the depths of this economic crisis and unravel the complexities. The housing crisis. Imagine this. You're walking down the street and you see tents pitched up on the sidewalks. Why? Because people can't afford homes anymore. The housing market in Canada is in a state of chaos, and it's not just a simple hiccup. It's a full-blown crisis that's affecting everyone, from young couples looking to buy their first home to retirees hoping to downsize. And guess what? It's getting worse. Now, let's talk about the elephant in the room. You might think, oh, a small increase in interest rates won't hurt. But hold on a minute. The Bank of Canada jacked up the interest rates from a mere 0.25% to a staggering 5% in less than 2 years. Now, your fixed payments on your mortgage suddenly don't even cover the loan balance. It's like trying to fill a bucket with a hole at the bottom. And it's not just the homeowners who are affected. The high interest rates have put a damper on all home building projects in Canada, including apartment complexes. Even projects that had received significant investment and multi-year zoning approvals are now on hold. The cost of construction has skyrocketed, making it financially unviable for builders to continue. So what happens next? Do we just wait and watch as the crisis unfolds? Interestingly, Canada is the second largest country in the world in terms of land area. Yet, it has a population density of just 4 individuals per square kilometer. So why the housing crisis? Well, it's because they're not building enough houses. Simple as that. Canada needs to build close to 1/3 of its total existing housing stock by the end of 2030 to achieve housing affordability. That's around 5.2 million new homes. But here's the kicker. Our current rate of home building needs to triple to meet this target. And this is happening at a time when there are labor shortages and rising costs of raw materials. It's like trying to win a race with your shoelaces tied together. And don't even get me started on the politicians. Opposition leader Pierre Poilievre has been slamming Trudeau for failing to make housing more affordable. But it's not just the opposition. Even Trudeau's allies are pointing fingers at him. Even his coalition partner, Jagmeet Singh, is publicly criticizing him for the mess that is Canada's housing crisis. So, if everyone knows there's a problem, why isn't anything being done? Well, to solve Canada's housing affordability crisis, it's going to cost a whopping 1 trillion Canadian dollars by the end of this decade. Yeah, trillion with a T. And this isn't something the government can do on its own. The private sector has to step in as well. So, is there any good news? Well, the federal government has taken some steps, like eliminating the goods and services tax on apartment construction. But let's be real, it's like putting a band-aid on a bullet wound. So you see, this housing crisis is not just a ticking time bomb, it's a time bomb that's already started to explode. The currency conundrum. So we've already talked about the housing crisis. Now, what else could go wrong? Well, unfortunately, there's an ongoing currency conundrum. And if you might be wondering, why should I care about currency rates? Let me tell you, this isn't just a problem for globetrotters and international business moguls. It's affecting everyone, right down to the average Joe and Jane. Picture this. You're planning a trip across the border to the United States. You go online to check the exchange rates and bam! The Canadian dollar is weaker than ever. Now, instead of enjoying a shopping spree or a nice dinner, you're counting pennies. And let's not forget about online shopping. With the Canadian dollar in the doldrums, those sweet deals on international websites don't seem so sweet anymore. Even if the website offers free shipping, the currency conversion could make your jaw drop. And if you're thinking of using third-party currency exchange websites, think again. Some of them charge up to $30 for overnight shipping. It's like they're holding your money hostage and you have to pay a ransom to get it back. A weaker Canadian dollar thus means that everything from your morning coffee to your weekly groceries is getting more expensive. Now, let's dig a little deeper. Why is the Canadian dollar so weak? One reason is the rise in global bond yields. And in case you're unaware of what global bond yields are, let me explain in simpler terms. They're like the interest rates for countries. When they go up, it's more expensive for countries like Canada to borrow money. And guess who ends up footing the bill? That's right, you and me. So, the next time you see your utility bill or mortgage payment go up, you know who to blame. Stagnant economic growth. At number 3 is yet another storm cloud on the horizon: stagnant economic growth. Let's start with the basics. Economic growth is like the heartbeat of a country. When it's strong and steady, everything seems to be going well. But when it starts to falter, that's when you know you're in trouble. And guess what? Canada's economic growth is not just faltering, it's practically flatlining. According to some sources, the country's real GDP growth is expected to be a measly 1% in 2023 and an even more dismal 0.9% in 2024. The villain of this story? Remember how we discussed high interest rates affecting the housing market? Well, they're the ones putting the brakes on economic growth. The Bank of Canada has been tightening its monetary policy to combat inflation, but this has led to a slowdown in various sectors. The high interest rates, having already resulted in soaring household debt and other payments, now even make people think twice before spending money. But it gets even worse from here onward. The Bank of Canada is walking a fine line between over-tightening and under-tightening its monetary policy. It's like walking on a tightrope, and one wrong move could send the economy tumbling down. The central bank pays close attention to inflation and jobs reports before making its rate decision. And here's another curveball: population growth. More people should normally mean more spending, but the experts are of the opinion that population growth tied to strong immigration levels will outpace job gains in Canada. This means higher unemployment rates and, you guessed it, less consumer spending. So what's the end game here? Are we doomed to live in an economy that's stuck in the mud? Well, the Bank of Canada is expected to ease its policy rate starting in the third quarter of 2024, but that's a long way off, and a lot can happen between now and then. The education gamble. And last but not least, let's tie all this back to the high-stakes game we just discussed: Canada betting on international students. The stakes for this game? It could either pay off big or leave us holding an empty bag. Let's start with the numbers. Since 2008, every new dollar in Canada's higher education has come from international students' tuition. This started because Canadian colleges and universities were getting less money from the government, and to fill the gap, they turned to international students who pay higher tuition fees. In Ontario alone, international students now make up over half of the student body in the college sector. Just think about that for a second. More than half. It's like walking into a Canadian college and feeling like you're in a United Nations assembly. And here's the kicker: 76% of all tuition fees in that sector come from international students. But wait, there's a twist. A majority of these international students are from India, and they're contributing more money to the college system than even the government of Ontario. At this point, Ontario's per-student funding at universities is only 57% of the average of the other 9 provinces. It's like trying to run a 5-star restaurant on a fast food budget. And other provinces are heading in the same direction, with the possible exception of Quebec. The situation is so dire that experts are calling it abysmal and warning that the entire country could end up like Ontario if new strategies aren't adopted. But why is this a problem? Well, for starters, it's not sustainable. International fee income underwriting the national university research effort is neither acceptable nor sustainable, says Vicky Thompson, chief executive of the group of 8 universities. It's like building a house of cards. It looks impressive, but one wrong move and the whole thing comes crashing down. And it's not just about the money. The influx of international students has led to a brain drain of top talent, especially among early career researchers. It's like we're attracting the best and brightest from around the world, only to lose our own talent in the process. And even if that wasn't enough, with larger class sizes and less personal attention, the quality of education for Canadians themselves is at risk. But what about the international students? Getting a student visa for Canada is no walk in the park. The process is riddled with pitfalls that can lead to rejection. From proving English language proficiency to showing sufficient funds, the hurdles are many. And even if you clear all these, there's the looming question of whether you'll be able to return to your home country after your studies. Fail to convince the immigration officers of this, and you're looking at a visa rejection. But let's say you do get the visa and make it to Canada. You'd think the hard part is over, right? Wrong. Many students find themselves disenchanted with the quality of education they receive. It's not what the glossy brochures promised. And then there's the issue of visa limbo. You're in Canada, but your prospects of gaining permanent residency are slim to none. And don't even get me started on the financial aspect. Tuition fees have skyrocketed, and many students find themselves struggling to make ends meet. The recruitment businesses are thriving, but at what cost? The focus has shifted from providing quality education to merely filling seats. It's like selling tickets to a blockbuster movie only for the audience to find out it's a dud. But let's not forget that education is a cornerstone of any thriving economy. If the education system falters, it's not just the schools that will suffer. Businesses won't find the skilled workers they need, and innovation will stall as well. The signs are unmistakable. Canada's economy is beyond mere challenges. It's on the cusp of a crisis. The pressing question now isn't simply if the economy will struggle, but rather the extent of the impending turmoil. Is Canada capable of averting disaster, or are we on a road that seems to have no end in sight? That's it for today. Hope you got value out of watching the video, and if you're interested in more videos about economics, make sure to check out the video linked on the next screen. Thanks for watching, and I'll see you in the next video.